Hello traders, how to trade engulfing candlestick pattern and also how not to trade engulfing candlestick pattern. Today in this video, I will discuss everything you need to know to trade bullish or bearish engulfing pattern. Bullish or bearish engulfing candlestick pattern is one of the most popular and profitable trading candlestick pattern that traders love to trade. But if you don't know how to sort out the right pattern, you might be ending up with a lot of losing trade. So today I will give you 3 things that you need to remember to trade bullish or bearish candlestick pattern and how you can maximize your profit in trading this pattern. Sound interesting? Then smash the like button. And also don't forget to subscribe if you're new to the channel. There will be a lot of content. Also every day I'm releasing a lot of content that you will find in this channel that will help you to be a profitable trader. For those who don't know me, my name is Nizam. I'm a trader. My goal is to help you to become profitable. Instead, let's begin. Okay, so first let's see what is bullish or bearish engulfing pattern, and then we'll go to the real things that you need to know. I know that this is the basic things you might have already known it, but it is important that you understand it clearly, so I am clarifying again. So first of all, let's see the psychology behind bullish or bearish engulfing pattern. What is a bullish engulfing pattern? When you see a candlestick pattern, say this is a bullish candle, engulf the previous candle completely. So this candlestick pattern, we can say a bullish engulfing pattern. So what happened is, say here, if you consider this is a daily candle, this is 1 day candle, this is next day candle. The previous day the price opened here, the buyers pushed the price little bit high, and then the seller came back here, pushed the price this low, and then price closed here. So this is basically a selling candle. Okay, what happened next day? As soon as the market opened, the sellers tried to push little bit the price low, and then the buyers took full control, pushed the price well above and crossed all the levels the previous days had and closed above everything. So this candle, we can say a bullish engulfer, and this pattern we can say a bullish candlestick pattern. The same thing but opposite way when it comes to bearish engulfing pattern. So what happened on the bearish engulfing pattern? The same way the price opened here and closed here, created this green candle. Next day the buyers tried to push little bit high, and then the sellers completely took control and closed the price well below the previous day's opening. So that is what we can say bearish engulfing pattern, and this candle we can say a bearish engulfer. So these are the definition and psychology behind this candlestick pattern. Now why this candlestick pattern is so popular is because when this candle is formed, this is giving you a limit that which zone is mostly in demand. You know that this area, this value, this zone, there is a lot of buyers in this area, and when you buy from here, it is a protected area. If you put your stop loss below this low, it is a high probability that this price will move up well above to take your trade to 1 to 2, 1 to 3 risk reward ratio. Now there are 3 things you must remember before trading this pattern, because all bullish or bearish candlestick pattern will not be profitable or will not go in the direction you expected. So to eliminate the false signal, you must remember 3 things that I'm going to tell you now. 3 things you must remember before trading this candlestick pattern. The first is the direction of the trend. This is the most important. Always try to avoid trading against the trend of bullish or bearish candlestick pattern. So this is the first thing you need to remember. The second thing you need to remember is area of value, support, resistance, or trend line. So when you see a bullish or bearish engulfer, you might see them anywhere in the chart, a lot of them. So if you trade it wherever you see, it will be a bad idea. You need to see where this candlestick pattern is formed. Is there any historically it is in a support, in a resistance, or on a trend line? That is the area of value. So if you see this pattern in that zone, that is where you can trade this instrument, or you can trade this candlestick pattern. So I'll show you as well how you can sort that out. The third thing that you need to remember is health of the candlestick. So when you see a candle like this, say for example a bullish candle, something like this, okay, a small wick at the bottom, a little bit wick at the top, whole body green, a bullish candle or bullish engulfer, that is a healthy candle. On the other hand, if you see a candle like this, say for example a long wick at the bottom, and then there is a smaller or comparatively smaller body, and there is a wick at the bottom, if you consider this is also a bullish engulfer, this is not a good candle, this is not a healthy candle. So you need to look at the health of the candle. If you remember these 3 things, you can eliminate a lot of false signal from bullish or bearish engulfing candlestick pattern. Now let's see in real chart how we can correlate these things in any strategy. Okay, so let's see some real examples where you can find out the actual bullish or bearish engulfing candlestick pattern. Now look at this market here, it's EUJPY. Now look at this. First of all, this is the direction of the trend. You see that the price is creating a higher high and higher low starting from here. Say it is a long-term trend, but if we consider that the trend is from here, then what you see that the price has created an impulse followed by correction. So every time the price is creating higher high and higher low, and it is a nice uptrending market. So this is the direction of the trend. So in this market, you always look for bullish engulfer, because this is what is very important. You are trading along the direction of the trend. The next thing you need to remember is the health of the candle, and also where this candle is formed. So let's say if we see a couple of examples, there is a lot of examples of bullish engulfer. Let me show you what I mean by the health of the candle. Look at this one here. Okay, so this is a healthy bullish engulfer in an area of value. So these types of candle, when you see these 3 things, when you keep your selection criteria based on these 3 things I mentioned, you will eliminate a lot of losing trade. Why? Because see, when you see this market, let's draw this trend line. Okay, so what you see for this bullish engulfer, so there is a couple of bullish engulfer. There is one here, this is also a bullish engulfer, this is also a bullish engulfer, this is also a this one, so let's remove this one. So there is a couple of bullish engulfers. So when you see this bullish engulfer, what first ask yourself, which is the direction of the trend? So definitely you see clearly it's an uptrending market. The first criteria is done. What is the second criteria? Where this candlestick is formed? It is clearly on a trend line, right? So this is the established trend going upward direction. And also if you see that if you cannot identify the trend, say you might say that okay, the price is here, for example, okay, the price is here. How do I know that this is the trend? Now look at this, it is already established trend line that you see that. Okay, another thing you can see that this is on a level of support. So look at the past here. Okay, the price has created, this is a resistance here, resistance here, now it is acted as a support. So it is a very, very important area of value. So when you see a candlestick pattern like this in such an important area of value, you can consider this one as a valid signal. So the next thing you will be considering is, as I told you, is the health of the candle. Let's consider how healthy this candle is. Now look at this candlestick pattern, this green candle. What you see, look at the bottom of the candle, there is a little wick at the bottom. That means sellers even couldn't push the price a little bit even. That means the buyers are very strong in this zone. Now look at the body of the candle, full body. Okay, that means what do you mean by these things? The thing is that when the price opened here, as soon as the market opened, the buyers started to take control. And when the whole period of this, it's a daily, whole day, only the buyers bought in this market, and only just before the day end, what you see, little bit of selling happen. Is basically not selling, it's profit taking by the buyers. So the candle closed here. So this kind of candle can give you a powerful signal in the direction of the trend, in the area of value, and also health of the candle. And that is what very, very important that you need to remember when trading bullish engulfing candlestick pattern or bearish engulfing candlestick pattern. Now what kind of like trading strategy you can use? You can integrate this candlestick pattern with any kind of trading strategy you have, because this is an entry signal. You can take 1 to 2 risk reward, 1 to 4, 1 to 5, whatever you want, but this is the entry signal that you need to be very, very carefully consider when trading these types of candlestick pattern. Now let's see more examples of bearish candlestick pattern. Okay, so let's see this example on euro dollar for a bearish engulfer. Now look at this zone here. So we can see a couple of bearish engulfer in this zone. Now first of all, look at the direction of the trend. Okay, so this is the established direction of the trend, downward trend, right? Now on this trend, what we see that this is a trend line. Let's bring the trend line closer here. So this is a trend line that we see, and on this trend line, what you see that there is a bearish engulfer here, and also there is a bearish engulfer here. Both are winning trade. Now look at the health of the candle. Both of this candle closed below this previous day's close. Here also strongly bearish. So when you see a candlestick pattern like this in an important area of value, that is where you can find the high probability trade setup or high probability candlestick pattern. Now let's see our criteria. If we can set, the first thing is direction of the trend, the second thing is in an area of value or no. So what do you see the candlestick pattern? It basically in an area of value. This last thing you need to consider is the health of the candle. So we see a healthy candle that you can consider for your trade. Now if you see a market that is consolidating or in a sideways, something like this, then you don't need to consider the direction of the trend. At that point you only will look at support or resistance, and you must see that this candlestick pattern is formed in a support or resistance or no. It is very, very important. So these are the things that you need to consider when trading bullish or bearish candlestick pattern. If you consider this, I'm sure that you will eliminate a lot of losing trade from your trading account. I sincerely believe that you enjoyed this video. If you enjoyed that, give a thumbs up, and also leave a comment below if you have any question. Subscribe to the channel. See you in my next video. Thank you.